Hello, everyone. We still have a few people logging in now, so we are going to give them a few more minutes to get settled, and then we will get underway. Okay, I think we are ready to go. It's my pleasure to be the MC today. I'm Eunice, the Community Manager of Singapore Fintech Associations. And on behalf of SFA, I would like to extend a very warm welcome to all of you. We appreciate that you taking time off your busy schedule to join us today. So before we started, just a quick introduction of this expansion series, which is a new set of webinars organized by Singapore Fintech Associations and SG Fintech Club. In these sessions, we will make a deep dive into some of the world top market, explore what are the key trends and regulatory environments, and look into expansion and growth strategy, and hear from our in-market experts. And today, our first market is Malaysia. Malaysia has many characteristics that fintechs are looking for, with a sizable populations, large smartphone penetrations, and also young population eager to try out new services. So before we start the sessions, we would like to invite your questions. Please look at the Q&A and the chat box on your screen at the bottom. If you think of any questions at any point of time, please feel free to type it there, and we will hold this for the Q&A sessions at the end of each presentations. So to begin today's sessions, we are pleased to have Wilson, who is the co-founder of Policy Street, as well as the Vice President of Fintech Associations of Malaysia with us today, and to share with us the overview of Malaysia fintech ecosystem. He will also be focusing on the key opportunity, what are the perks for Singapore startup to expanding to Malaysia. So over to you, Wilson.
Sure, thanks, Eunice. Hi, everyone. Good afternoon. It is my pleasure to be with you today. My name is Wilson. I run an insurtech company in Malaysia, and I'm also the Vice President of the Fintech Association of Malaysia. I'll be sharing with you in the next 15 minutes or so an overview of the fintech ecosystem in Malaysia, and also very importantly, what are some of the key opportunities for you as a Singapore-based company to venture into your neighboring country in Malaysia. Malaysia has a very interesting market when it comes to fintech. Like what Eunice was mentioning, we have a fairly decent market size of slightly more than 30 million population, not the largest in Southeast Asia. But I think the unique part of our market size is that if you look at the entire Southeast Asia, Malaysia belongs to the upper income economy state. Of course, Singapore is the most developed and the most advanced country in the Southeast Asia, followed closely by Malaysia. And this is where I feel that if you are thinking about going abroad and to venture into Southeast Asia, Malaysia should be considered as one of your first, if not the first, expansion market because of numerous reasons. Number one, the entire demographics and also familiarities in the Malaysian market is very similar to Singapore, right? In terms of languages, the market or the population can converse very well in English, in Bahasa, and also in Mandarin. It's just that the market opportunity is bigger at about 30 million populations. And I often tell my colleagues and also my peers or even regional companies that if you're able to thrive in Malaysia, it could also mean that you will be able to stamp your mark and expand in a very efficient manner in the rest of the Southeast Asian countries. And number two, I think in terms of online banking penetrations, in terms of the internet penetrations, we have a very much a ready infrastructure for tech companies, especially fintech companies, to thrive. Later on, my colleague John from Zico, and he is also the secretary of the association, he will deep dive into some of the key regulatory areas to share with you. But I have to say that in Malaysia, our regulatory openness is also one of the key components why you should consider to expand your business to Malaysia. In terms of urban population, well, I believe most of you will be familiar with KL, with Kuala Lumpur. Perhaps some of you may be familiar with Melaka or Penang. Of course, today, there's no travel bubble or green lane, and we have not been able to travel for the longest time. But pre-COVID, whenever I visit, Melaka or Penang, I see many Singaporeans who visit Malaysia. But if you look at the urban population, this is where Malaysia is a bit different from Singapore, right? I would say Singapore is 100% urbanized population, whereas in Malaysia, about 3/4 is urbanized. But there is also a fair share of population who are residing in suburbs, in secondary cities, in rural areas, and most of them belong to the unserved or underserved populations. So if you are doing financial inclusions, if you are advancing insurance inclusive solutions, I think the 30–40% population of Malaysia, which equates to about 10 million populations, would be a very good market size for you as well. And in terms of smart home penetrations, mobile banking penetrations, we are fairly matured. And this means that the society or the population as a whole are very open to adopting technology. And this is where I believe as a company based in Singapore, if you were to expand your business solutions to Malaysia, right, the key urban areas will be your immediate market, from Penang to KL, to Melaka, even to East Malaysia, Kuching and KK. These urban hotspots will be your immediate access markets. And of course, if you have the relevant solutions, you will be quite easy to also expand to the secondary cities or smaller towns as well. So I just want to start off the entire sharing by anchoring on 5 key opportunities in FinTech Malaysia, right? As I mentioned, we have a fairly decent market size, more than 30 million population. What is very exciting is that more than this 50% of the population, they belong to the Gen Y segment. They are below 35 years old. And this means that they are highly open to technology adoptions. And also, there is a growing number of emerging affluent in this respect. There are a lot of young professionals, young entrepreneurs who are willing to spend, who are looking for better financial services or better financial experiences. And they are more than happy to try out fintech solutions, in which later on I will share with you in one of the slides. And number 2, well, this part is not from me alone, right? This is a sentiment shared among many overseas companies who have set up shops in Malaysia. And in my company, I have VCs who are Singapore-based VCs, and they told me the same thing, right? One of the key theses why they invest in Malaysia startups is that The talents are quite skilled, if not equally skilled, but in terms of costing wise, the talents here or the cost of doing business in Malaysia generally is about 3 times cheaper, right? Just because ringgit is 3 times cheaper compared to Sing dollar, so to speak. But I think if you are looking to strive the balance of having a major operations instead of doing the bulk of the manufacturing or operation in Singapore, right? Malaysia could be a very good market for you to consider, because essentially the cost of business is lower and it is not difficult for you to find skilled, good and affordable talents. And third is really about regulatory openness. Bank Negara Malaysia and also Securities Commissions in Malaysia, they are very receptive to new business models, and there are many new regulatory exemptions and also policies which are being rolled out, or if not rolled out to the market. And you will see in some of these key verticals, in fact, there have been a number of Singapore-based fintech companies who have taken advantage of these new licenses and new policies and set up shop in Malaysia. And StashAway is one of them, right? StashAway is a Singapore started company, and today I would say that they are the #1 robo-advisory firm in Malaysia. And fourth is really the underserved market. In terms of financial inclusion and insurance penetration is still relatively low in Malaysia. If you look at insurance penetrations, it's hovering at about 55% for the longest time. I think in Singapore it's more than 100%, right? And financial inclusion is still a very big play, it's still a very big theme in this market. And last but not least, it is really about technology adoptions, right? For example, how ready is this potential addressable market is open to your different fintech solutions. And if you look at some of the key trends that I'm going to share later, you'll see that the population here in Malaysia is very open and it's very ready. And in fact, they are hungry to look out for more advanced fintech solutions there, and they're quite open to try out different business products and etc. What I will do next is to share with you an overview of the entire landscape. I mean, thanks to the source from Fintech News Malaysia. If you look at the entire landscape of fintech ecosystem, understandably, payment or e-money, e-wallet, these two comprise of the largest pie of the entire ecosystem, followed very closely by lending, in which a lot of the small, medium enterprises or micro SMEs are benefited from the lending fintech solutions, and followed closely and shared equally between wealth tech. So wealth tech is defined as mainly the robo-advisory players and also insurtech companies. And the rest would be remittance, blockchain, KYC. Islamic Fintech is also a segment which is growing rapidly, or Sharia compliant fintech solution is also well accepted by the market, because if you look at Malaysia, more than 60% of the population are Muslim, right? So if you're able to offer a Sharia compliant fintech solutions, you will be able to penetrate to this part of the market. And crowdfunding is also a regulated industry in Malaysia, equity crowdfunding. My own company, we benefited from the SC license, right? Because I think Securities Commission released the crowdfunding framework in 2016. And my company, we underwent a crowdfunding exercise at the start of the entire pandemic early last year. And we were lucky to conduct the highest crowdfunding campaign in the history of Malaysia as of first quarter of this year. Right, so I would say that if you're looking into ECF, if you're thinking about crowdfunding solutions, Malaysia will be also quite a good market for you to explore. And this is a map. I believe that not all fintech companies are condensed or are captured here in this map, but it will give you a very good overview of who are some of these key players in Malaysia fintech ecosystem. So there are more than 200 fintech companies which are captured by this landscape snapshot. And you could see payment and e-money, they are the largest components of the entire ecosystem. but I believe that there may be consolidations for e-wallets. If you follow closely the fintech ecosystem news progress in Malaysia, you'll realize some of these e-wallets or even payment players, they have teamed up with larger ecosystem players, listed companies, conglomerates to vie for the digital banking licenses. So as early as first quarter of next year, up to 5 digital banking licenses will be released by the Central Bank of Malaysia. And from our information, there were 29 applicants who have submitted the digital banking application to the Central Bank of Malaysia. So it's quite interesting because although different fintech players are different in different realm, in different vertical, but what we see in Malaysia is that a lot of different fintech companies also come together to forge strategic partnership and to also establish collaborations in order to win a bigger market shares. And this is practiced quite commonly in Malaysia. And in terms of regulatory openness, I will let my colleague John to share more detail. This is just an overview. I think in terms of regulations, Bank Negara and SC, they're quite open, and they have been different exposure drafts, frameworks, and policy papers which are released or being released. And as a FinTech Association of Malaysia, we are more than happy to advise or to work with you or to connect you to the relevant parties if you were to encounter any regulatory issue when you were to set up shop in Malaysia. So I will go through a review on a few key major trends, just to give you the flavor in terms of the entire landscape in Malaysia. Thanks to COVID, increasingly Malaysia has become a cashless society. Even my parents in their 60s, not living in big cities, they are able to transact seamlessly using their smartphone, and they are very comfortable to transact online, right? And similar trend is witnessed across all segments of the populations. And I think this is spurred by COVID, right? Where we are forced to go online, we are forced to embrace digitalizations. And I think this gives a strong advantage to fintech companies, because most of the fintech business model or solutions are anchored very clearly on digital transactions, right? To make the entire financial services experience better, cheaper, and faster, and digitalizations is definitely the way to go. And with the embrace of cashless model, a lot more fintech models or business opportunities are being embraced by the large segment of the populations. Same goes to e-wallet. In 2019, in 2020, in average, one person in Malaysia made 170 e-payment transactions compared to only 150 in 2019, right? So across all segments, whether it's online banking, whether it's e-wallet, whether it's merchant registrations for QR code acceptance, we are seeing growth across all sectors where the adoption in e-payment has increased. And of course, PayNet, which is one of the key entities under Bank Negara Malaysia, has also come up with different initiatives to allow e-payment to be more receptive, to be more seamless throughout Malaysia. So most recently, there have been numerous more e-wallet companies who have embraced the single QR code initiative. Meaning, if you walk into a shop, you walk into a physical merchant store, there won't be many different QR codes on display, right? One single QR code will be accepted by PayNet, and the transaction will be allowed to go through regardless of what kind of e-wallet that you are using. So this speeds up again the convenience and also the entire customer behavior when it comes to e-payment. And this is actually very helpful, because if your fintech solutions is relying a lot more in e-payment, in digital payment, I think the customer adoptions or the readiness of the customer behavior to embrace your solution is already there. Very interestingly, accelerated adoption of digital investment platform. I think about a few months ago, when Securities Commission of Malaysia, one of the two financial regulators of Malaysia, came out to share their annual report. Compared to 2019, in 2020, the country has registered more than 8 times growth in terms of number of accounts open for new digital investment management platforms, right? So there are a lot more Malaysians who have gone online to invest in equities, to invest in robo-advisory platforms, to invest in even cryptocurrencies, right? And this trend is continued to grow. So this shows that, again, the Malaysian population is highly receptive for digital investment platform. And this trend is continued to be increased because today there are only limited number of players in the digital investment management sector and also the digital asset exchange sector. And if you are doing any of these businesses in DIM or DEX, right? I'm sure that you could possibly find opportunities in the Malaysian market. And this is more on wealth tech. As I mentioned earlier, StashAway, I think StashAway, if not wrong, they are one of the first, they were the first robo-advisory, which was introduced to the Malaysian market. And they were probably also the first Singapore-based robo-advisor who has landed themselves in Malaysia. And today they are the #1 player in this market. They command a very strong market share. And this is a testament to say that even you are running a Singapore-based fintech company, you are still able to command a strong market share or market leadership if you expand to Malaysia, provided that the solution that you offer is what the market is looking out for. And for equity crowdfunding and P2P is also very interesting. For example, compared to 2019, the equity crowdfunding successful campaigns has gone up quite a lot. If you look at 2019, there were only less than 30 issuances. But in 2020, the number has grown more than 2 times. Same goes to the number of campaigns and also more importantly, the capital raise. And I could attribute this trend to a couple of reasons. Number one is that the market, the investor side, right, they are ready to invest into equity crowdfunding campaigns. And number two, the government of Malaysia has also come out with a few great initiatives. And one of them is co-investment fund. So government of Malaysia has actually set aside MySIF, which is Malaysia Co-Investment Fund, to co-invest into all of these equity crowdfunding campaigns on a 1 to 4 basis, up to 1 million ringgit. And that has helped spur the market to be adopting equity crowdfunding. For peer-to-peer, last year we saw a slight dip in terms of the number of issuers. However, the number of campaigns has gone up. But of course, understandably, for peer-to-peer is more towards the credit rating of the SMEs. And last year, due to the COVID pandemic, it has not been so smooth and easy for the peer-to-peer lending sector. But this year, we are seeing the market to rebound, right? And we are very confident that the peer-to-peer industry is going to grow again as the entire pandemic situation is normalized. So with that, in the short 50 minutes, I hope that I give you just a very high-level overview of what the ecosystem in Malaysia entails. But in a nutshell, I think Malaysia being the closest neighbor, just across the street with Singapore, we present a very strong market opportunity to Singapore-based companies with the numerous reasons that I've just shared across. And as an association, we are more than happy to welcome you to explore venturing into this market. And if you need any help, we are more than happy to connect and also to advise you to ensure that your business expansion is smooth and hassle-free. So with that, I will stop my presentations and I'll pass the floor back to Eunice.
Thank you, Hassan. So I see a question here from Anna. He is asking, what is the top 3 challenges in setting up a fintech business in Malaysia? For these questions, I will leave it to the session 3 that we have a live panel discussions among the founders who have successfully penetrated into Malaysia. So they will probably share with you the challenges they have been facing and how they actually go through it. So for now, I can see there is one question here from Son. He's asking, Wilson, is there any incentive given to foreign insurtech or perhaps fintech in general if they were to invest in Malaysia? Wilson, are you able to help us to answer this question?
Sure. I think thanks, Sean, for the questions. I think you are referring to investment, right? For investment into Malaysia, or are you referring to setting up a business here in Malaysia? Okay, set up business. All right. So in terms of business setup, whether in terms of any key financial incentives, I have to come back to you on that, because from Invest KL to Matrade and a few, there could be a few incentives. For example, Matrade also has a fund with enterprise with EDB, right, to help Singapore-based companies and Malaysian-based companies to do certain form of market opportunities, explorations, business setup, and whatnot. I'll come back to you in terms of what are some of the exact incentives that you will have when it comes to setting up business in Malaysia. And number two, how do we resolve issues of bureaucracy and possible lower efficiency with government officers handling foreign company applying to invest in Malaysia? So I have to, on this point, I would say that in terms of setting up business in Malaysia, as in the context of registering a Sendram Berhad in Malaysia and to get the necessary approval from the relevant government agencies, I think Malaysia, we have improved and enhanced the services a lot. And in terms of setting up shop, in terms of setting up a Sendram Berhad here, it is not a hassle at all. Of course, it may not be as fast, as per setting up a company, a private limited in Singapore, but the entire process will be also quite friendly to you as a foreign investor and a foreign company setup.
Okay, thank you, Wilson. So we will stop for here. And if you still have any questions, please feel free to drop at the Q&A and we can come back later. And now I would like to invite our next speaker, Jonathan Lin. He is the corporate partner from Zayed Ibrahim & Co., also a member of Zicolo, to share with us the overview of regulatory landscape in Malaysia. So over to you, Jonathan.
Yeah, thanks again, Eunice. Just give me a second, let me share my screen. Okay, once again, good afternoon, everyone, and thanks SFA and Enterprise for this opportunity. I trust that indeed Wilson has laid a wonderful overview of the ecosystem in Malaysia, and to match his comprehensive presentation, which I will try really hard later, I'll just talk about very largely the regulatory aspects of each and every main verticals that we're looking at in terms of the Malaysian fintech ecosystem. Now, just a short introduction of Zico or Zicolo, for some of you who may have come across who we are actually a regional firm. We have about 18 offices in the entire ASEAN and all ASEAN countries. And with that, I am from the Malaysian side of the offices, whereby it was where the firm was founded at start. Okay, so with that, let me quickly run through in terms of, let me kickstart with just the two main regulators in Malaysia when it comes to financial services ecosystem. Of course, largely we have the Bank Negara Malaysia, which largely encompasses offerings or government offerings that are non-security based, whilst items that were shared by Wilson earlier in terms of equity crowdfunding, peer-to-peer lending, even digital assets itself, those will fall within the purview of the Securities Commission of Malaysia in that sense. Now, over the past couple of years, Bank Negara has been very active in terms of implementing initiatives that's not just rolled out by the central bank themselves, but also facilitated together with a couple of Malaysian agencies Of course, it started off similar to Singapore back in 2016, whereby most countries has initiated a sandbox regulatory program, which is still available today for innovation that perhaps are finding it very difficult to fit into a specific regulatory framework that is existing in Malaysia. And therefore, the sandbox program, to just clarify that position, it's not a way to skirt around licensing regimes, but rather it is innovation that actually fits into the criteria of the best interest of Malaysia requirement. And therefore, because of that particular offering itself, maybe our regulation at this juncture is not ready to accommodate for it. And Bank Negara would have a sift through as to whether such application would fall within the sandbox program. Now, not just the sandbox program, as mentioned, Bank Negara has also worked very closely with agencies like MDEC and UNCDF. In 2020, Bank Negara and MDEC has launched a FinTech Booster Program, whereby participants of these programs was assisted by legal firms and advisory firms that provides legal clinics that will assist companies who have high value proposition to deepen their understanding and due diligence on compliance and regulation when it comes to country. So maybe this could perhaps assist to answer Sean's earlier question as well, whereby when it comes to navigating your footprint in Malaysia itself, we do have a couple of agencies that will be available to lend a hand. And of course, through FAOM, through Fintech Association of Malaysia, we will be more than happy to direct you to those particular agencies and assist you along the way as well. So similarly, and to curb in response to the COVID-19, Malaysia has also introduced something called a National Technology and Innovation Sandbox, an NTIS program, sometime last year, which is in line with what we call as a My Digital Blueprint initiative, where I think Wilson also shared a little bit just now that recently we launched this platform called the Digital Investment Office. Now, these are the initiatives whereby the government, as well as respective agencies like like Magic, like Cradle, these are the parties that came together to try and help assist startups and even fresh innovation or technology-based companies, whether it's foreign or it is local, to navigate alongside the regulatory framework that we have, so that it allows opportunities for parties to then start having a footprint in Malaysia to a very large extent. Now, as mentioned earlier, the My Digital program was recently launched, and then this is actually the Digital Investment Office, whereby it is a channel whereby we are trying to entrust, where the government entrusts two agencies, largely MIDA and MDEC, to ensure to be a single platform to ensure and welcome digital projects and digital investments that were to come into Malaysia, whereby investors need to, instead of navigating over multiple channels of regulatory agencies or being unsure as to how you navigate, the DIO is intended to be one single platform to bring everyone together, so that it will provide a more seamless participation when you set your footprint in Malaysia itself. Now, that being said, I will jump straight into the main regulatory frameworks that we largely that encompasses largely the fintech financial services ecosystem in itself. So payment instruments, as mentioned by Wilson as well, consists of the largest perhaps set of market share in Malaysia. And this is definitely within the e-wallet, or rather the e-money issuance space itself. And in Malaysia, if any parties were interested to do a deep dive or set a footprint in providing this set of businesses in Malaysia, it is a regulated activity that requires Bank Negara's approval. Now, that being said, under the FSA, which is the Financial Services Act, which is the primary legislation that governs this entire space itself, electronic money is actually referred to as a payment instrument, whether it's in a tangible form or a non-tangible form, whereby it stores funds electronically paid to an issuer and is able to be used to make payments to any other person other than the issuer. Now, why do I raise this definition? Because in a very broad sense, an e-wallet that does not meet the above criteria that I just mentioned will not be rendered as an EMI under the guidelines. So that's something to take note, especially when we talk about things like a closed loop wallet, or how do we actually navigate in platforms whereby you would have different forms of offerings in terms of whether it's a credit, a rebate token, or anything of that sort. So another vertical that I presume parties that will come into Malaysia will need to take note of would be the payment system space. Of course, again, under the FSA, payment systems is very broadly defined to include any system or arrangement for transfer, clearing, or settlement of funds or securities. Now, payment system, as in a very general sense, is not a regulated activity, but an operator of a payment system under the FSA will require approval from Bank Negara if that particular payment system enables transfer of funds from one banking account to another banking account, which includes things like debit transfer, credit transfer, standing instruction, but it excludes, of course, remittance itself. I'll touch on remittance a little later after this. Or that particular payment system operator provides a payment instrument network operation. Now, a good example to that will be operators like Visa and MasterCard that has their own entire payment rail, and they issue cards as well in the sense whereby you actually introduce a payment instrument through a payment instrument network operation. Now, the third part to complete this entire ecosystem will very much fall on merchant acquiring services. Now, at this juncture, the existing frameworks that we have, merchant acquiring services doesn't really have a prescribed form or prescribed guideline, but merchant acquiring services is defined under the FSA again as an operator of a payment system that enters into a contract with a merchant for the purpose of accepting payment instrument for payment of goods and services. Now, that space at this juncture is very broad. This is just one single definition, and there is no prescribed framework that is being implemented at this juncture, but a party who wishes to embark into a merchant acquiring services or would want to be an operator of, or rather a third-party acquirer to a very large extent, will require not an approval, but registration with Bank Negara. Okay. Then it comes to the next big vertical, which I trust that most parties are also very keen in, and this would perhaps be very relevant, especially in the Southeast Asian market, whereby parties who are keen in the businesses of transferring funds or business models that actually take into consideration of fund transfer will need to take heed of the Money Services Business Act 2011. Now, the MSBA defines remittance business to include not just transferring of funds, but facilitation of funds transfer as well. So the definition of remittance business under the MSBA is rather wide. However, and that's why whenever any party would approach us in the capacity of a law firm, I will always advise very much so that whether a license is required from Bank Negara or not, it is very important to run through your business model with your legal advisor, so much so that a legal analysis can be done because of the broad definition of remittance business, which include that word facilitation of transfer in itself. Now, of course, talking about the fintech ecosystem in Malaysia, I can't dismiss what Wilson has also shared earlier when it comes to digital banking. Yes, we have about close to 29 applicants. I think that was the last disclosure in social media and in the press itself, that there were 29, whereby we are only issuing about close to 5 licenses. And of course, at this juncture, that application process has closed since 30th June. Now, coming back or taking a step back, coming back to the EMI or the electronic money guidelines that I was talking about earlier. At this juncture, Bank Negara has I think sometime a couple months back, issued an exposure draft in relation to electronic money. Now, this new exposure draft seems to have, or rather, this new exposure draft seems to suggest that Bank Negara has taken a little bit more of an aggressive approach in trying to tighten regulation and provide a higher degree of compliance when it comes to EMI players. And in this space itself, what Bank Negara has also imposed is that it has leaned towards a lot more in terms of how a technology offering and the risk management when it comes to technology adoption is being put in place when it comes to an EMI operator. Now, that being said, the Bank Negara has also introduced things like an exit plan, things like the directors' duties or higher standard of governance when it comes to directors of a EMI in itself. Very much so, it is, I guess, taken or perceived in a view whereby Malaysia has somewhat reached a more mature ecosystem whereby now we are able to implement a higher benchmark of regulatory compliances when it comes to each and every one of these EMI players. That being said, I think what Bank Negara has also proposed in this exposure draft is even aspects whereby it was not addressed in the earlier or the existing framework, things like white labeling, things like the need for a more comprehensive exit plan should the EMI do not scale after X amount of years. All these kind of roadmaps of business continuity and position has been introduced in this exposure draft. But then again, my caveat, it's still an exposure draft and it has not been passed or implemented yet. So to navigate this space, if anyone is interested to apply for a license at this juncture, I will take a very prudent approach to say that whilst you would comply with the existing framework, you would need to also take into consideration the respective angles that has been reintroduced or newly introduced by Bank Negara through the exposure draft. Likewise, when it comes to the merchant acquiring services, it is also very interesting, as I mentioned earlier, that there was no prescribed guidelines available, but Bank Negara actually issued a exposure draft sometime last year. And again, if you run through the exposure draft, and all these are actually available on Bank Negara's website itself, you will see that Bank Negara has started to lean very much towards not just putting a framework in place, but also started to look into the robustness and the risk management policy when it comes to technology adoption. It also included certain areas that addresses fraud management and outsourcing policies that needs to be implemented by future merchant acquiring services operators in that sense. Now, for non-residents, companies that will want to set up in Malaysia, I'll just do a very quick general overview. So the general rule of thumb will very much be if you were to set up shop in Malaysia and it's a licensed business in itself, it will go without saying that most regulatory agencies or most regulators will impose for you to set up a local company in Malaysia. Of course, you're free to open any external account with a financial institution in Malaysia, and you're free to receive payments in ringgit to or from residents via an external account for permitted purposes. Now, the second vertical to my presentation, you'll see the entities that are seeking to conduct, whether it's a payment instrument, whether it's merchant acquiring, whether it's money changing businesses, these are definitely businesses that requires a local presence to be set up in Malaysia. And that being said, all these will fall within the purview of Bank Negara and its respective division and departments within. Now to my next slide. Like Singapore, I would say that in Malaysia, we too have our privacy policies. Of course, not as closely or comprehensive as it is with the GDPR, but the Personal Data Protection Act is the main legislation that governs the data processing or by a data user in that sense. And therefore, whoever or parties who are interested in managing or setting up shop in Malaysia will definitely need to be mindful that there is PDPA compliances, especially when you're dealing with personal data, whether it is from your employees' perspective to your customers in that sense. Of course, we too have a AML, a AMLA compliance to a very large extent, but AMLA compliances are very much exclusive towards reporting institution and the list of whole entire reporting institution that's been listed on the Bank Negara website. Money services businesses, insurance, e-money, fund management companies, these are businesses that will fall within the definition of reporting institution. And therefore, if any businesses, if you would like to set up shop that relates to any of these businesses in Malaysia, you would have to comply with our AML policies. And of course, unlike Singapore, we do not have a cybersecurity act, But our Computer Crimes Act 1997 is sufficient at this juncture to even encompass things that involves criminal offenses, hackability or hacking or unauthorized access to any program or any data or modification to computer contents to a very large extent. So that primarily is our existing legislation that we lean on when it comes to computer crimes. The other, I guess, the other law that needs to be made aware of course, is the Penal Code. And then when it comes to identity theft, when it comes to misrepresentation, the Penal Code will be a significant statutory provision that you need to be aware of. Now, what other regulatory adaptation that you will need to be aware of if you come into Malaysia and you were to set up shop when it comes to your fintech offering? Bank Negara has also issued a eKYC guideline as of sometime last year. And the eKYC guideline is relevant to not just licensed institution, but it is also relevant to players like designated payment instrument parties such as e-wallet operator. I think earlier, Wilson mentioned something about a single QR code that is being provided or rolled out by PayNet. That falls under the this part of the framework that's been issued by Bank Negara, the ICTF, the Interoperable Credit Transfer Framework, whereby parties who would like to adopt a single QR code so that you can streamline across the recognition of your payment itself will fall within this guideline of ICTF. And again, it's something that you would have to sort Bank Negara's approval with. Now, I've also highlighted two other policies here, which is RMIT and outsourcing policies. Very much so, these two are, in a very broad sense, very relevant to only financial institution or licensed entities in itself. But sometimes we do get encounters whereby clients will come in and say that, what kind of risk management technology policy should I adopt, or what kind of outsourcing policy may be relevant to us? And we'll always say that these are the gold standard that is being introduced by Bank Negara, and it's always good to lean on them as a guideline, even though you may fall within a vertical of the business that may not have these policies made relevant to you in that sense. Okay, that being said, I didn't speak too fast. This is any questions? I'll try and answer them if I can right now. If not, please feel free to ping me directly. I'm happy to jump into a call with any of you to just have a chat if you need to, in that sense. Back to you, Eunice.
Thank you, Jonathan. So we will go ahead and take a few questions now. And just a reminder, please be sure that to type your questions into the Q&A box on your screen, okay? So we have a question from Sebastian. He's asking, does company providing RegTech solutions required to have a local entity set up before providing the services?
At this juncture, I'm not aware of the need for you to set up a local presence in Malaysia, but very similarly, when you talk about RegTech and the rationale behind RegTech solutions is that Bank Negara will have this need of needing to have a point of contact at any point in time, especially during the rolled out, especially when you say that you will be providing a solution like eKYC form of RegTech. So very much so, whenever there is going to be a technical issue, or there could be any form whereby reporting is required, Bank Negara will very much need to have a point of contact that's contactable at all times. And I will not be surprised that by doing so, by approaching them, this will be a condition that they will implement. I hope that answers the question.
Thank you, Jonathan. And based on these questions, and Agong, she has a further questions. She is asking, do you suggested to open a local company for fintech? And if you could clarify if the company have to 100% by foreigner, or it should be shared by local?
Okay, so this go back to a little bit of the Malaysian economic history. Back in, I think, 2007, and those days, there was always this thing called the FIC, a Financial Investment Committee, and that has very much been abolished, or rather, it is no longer, I wouldn't use the word abolished, there are still certain particles that's relevant to them. But when it comes to 100% foreign ownership, technically, no private company in Malaysia has any equity restriction in terms of setting up a 100% foreign-owned entity. Now, but I would have to caveat a little bit, because when it comes to licensing regime and when it comes to certain regulated industry, for example, if I talk about the telco industry, there will be some form of equity controls that will be implemented. So it deviates from sector to sector. When it comes to the fintech sector, by large, there is really no prescribed or statutory requirement when it comes to a equity composition of needing to have local presence in that sense. However, there may be certain conditions being imposed upon approval, and these are not publicly made available information. And of course, through industry knowledge, we do know of certain entities that perhaps need to maintain a certain amount of local participation in their company itself. But by and large, there is no fixed regulation for that.
Thanks, Jonathan. Let's take the last question from Jason Cheong. He's asking, does InsurTech use the same FinTech B&M regulations and sandbox?
Okay, I think this would be a very good question for Wilson to answer, actually. But anyway, I'll do a quick attempt on it. The B&M regulation sandbox is open to all sectors of financial services, which includes InsurTech itself. Of course, at this juncture, we do not have a digital insurance guideline similar to the digital banking guidelines that was recently issued. Lots of rumors in the market saying that there could be one coming up very soon. Now, would you embark on the sandbox program? I think very much so. I would say that that is still the vertical that you would want to go ahead with if you want to roll out early prior to the uncertain issuance of that digital insurance guideline that everyone's talking about.
Thanks, Jonathan. So for the next sessions, we are honored to have Ern Chi, who is the Regional Director of Enterprise Singapore KL office, who is going to moderate these panel discussions alongside with Ian, the founder and CEO of Avira, and also Nikki, who is the founder and CEO of Kadap. Over to you, Ern Chi.
Hi, thank you, Eunice, and a very good afternoon to all our panelists who are dialed in virtually. As Eunice introduced, I'm Ern Chi, Regional Director of the KL Office of Enterprise Singapore. So Enterprise Singapore is actually the government agency that champions enterprise development. And we work with companies to build their capabilities to innovate and internationalize. So for our KL office, we have actually worked with quite a lot of Singapore companies across the various sectors to access and make investments in the Malaysian market. In the fintech space in particular, we are always happy to provide an overview of the licensing framework and as well as connections for companies to set up their network in Malaysia. So I'm very pleased today to have Nikki, the founder and CEO of credit card payment platform Kadap, and Ian, CEO and the founder of buy now pay later solution provider Avira, with us this afternoon to share about their experiences expanding into Malaysia. So I think to kick us off, we would just like to invite both of you to share briefly about your company and your current operations in Malaysia. So I was thinking maybe we can start with you, Nikki. I understand that you actually started your career working in management consulting and that you spent many years at American Express, and of course now you're running Kadap. So as you could tell us a little bit more about Kadap and how you have actually spearheaded this mission to provide individuals and businesses with a better way to pay and get paid.
Sure. Yeah, thanks. And thanks for inviting me to be part of the discussion today. So I'm Nikki. I'm the founder CEO of Kadap. Some of you may know we're a fintech company headquartered in Singapore. We have products for both individuals and businesses, but our main focus is really helping businesses of all sizes make and collect payments quickly and easily. And last year we expanded into Malaysia, and we have just our business product in the market because we see great opportunity to really help businesses, particularly the SME segment, both with digitizing payments as well as offering some of our solutions that can help improve cash flow by helping them make use of their available credit lines, which is primarily their credit card, to actually improve cash flow on a monthly cycle.
See, yes, thanks very much for sharing that. So I think that is a very interesting and unique product. And I think you can hear from Ian as well, who runs Abler, and I mean, he says that his fintech company runs a mission to humanize financial services that improve people's lives. So perhaps you can share a bit more about that too, Ian.
Yeah, thank you, NC, and the Singapore Fintech Association and everyone turning in for allowing me the opportunity to share. So Abler is a platform that enables merchants to allow consumers to pay for goods and services over time in a way that helps them increase conversions and accelerate revenues. So it's our mission to humanize financial services. Having taken an empathy-led approach, we have made it a point not to benefit when consumers fail. So as such, we have built in policies since the start of the business where we do not charge any late fees or interest. We believe people want to be timely with their commitments and that we just have to help them and enable them to achieve that. We also have a focus on providing access in ways that improve people's lives, such as enabling work and productivity, helping people build homes and families, providing more affordable access to education, and advancing people's well-being.
Yeah, thanks very much. So yeah, I mean, I think I first spoke to Ian about a few years ago when he first went into Malaysia. So I think, this mission remains very relevant still. So I think Nikki and Ian, actually, many of the attendees today at this webinar are actually first timers to internationalization. And of course, Malaysia, as Wilson first pointed out, is actually a market that a lot of Singapore companies choose as their first stop. So I'm just curious for you, why do you choose to go to Malaysia as your first stop? And what is one key difference between Singapore and Malaysia that many first timers may not be aware of? Perhaps, Ian, you can go first because I understand that you have been in Malaysia slightly longer. Sure.
Many of the reasons why Malaysia is an attractive expansion market has actually been covered by Wilson earlier on. So in addition, for Abler, we had chosen to go to Malaysia as our first stop, as it's a natural expansion market in terms of geographical proximity, language, culture, ready infrastructure for implementation, real consumer need, and not forgetting our strategic investors' presence in the country. I think, yeah.
Okay. So I hope that your expectations have been fulfilled. I mean, that, you had all this, you had this strategic focus on the Malaysia market. And have you seen that fulfilled in the time that you've spent there?
Yes, definitely. It's actually been better than what we had expected because of a lot of assistance and help from the various parties in the country, such as MDEC and all of that. Yeah.
Okay, great to hear that. So maybe Nikki, over to you now. Could you also share a bit about why, I understand that Kadap is also in Hong Kong, but I think Malaysia was also one of your first stops after Singapore. So perhaps you could share a bit more about that.
Yeah, sure. I mean, I don't want to repeat too much what Wilson had said in the beginning and also Ian, but I think very similar sentiments. I mean, Malaysia is obviously a sort of relatively higher income sort of state versus some of the other markets in Southeast Asia. And there's a large population that are banked. So for some of our product lines, it was a very suitable market, especially when some of our product lines rely on, card payments or a credit card, which is very prevalent in Malaysia. It's a really huge market in that space. And then, to echo what Ian said around local, being geographically straightforward, culturally, similar. So I think many of the same themes. One of the probably differences that we've noticed, however, is to answer the second part of your question, is actually probably more localization needed because there are quite a lot of sort of nuances around the local payment systems versus Singapore. So I think it's really important to make sure you have a good understanding of the infrastructure that already exists in the market and are prepared to sort of tailor the product according to that.
Okay, thanks for sharing that. When you say localization, do you mean different states?
No, I just mean different underlying sort of payment infrastructure or, looking at what, for us in the case of the SME market, looking at what they're actually using today and how we can kind of fit our products and solutions into that rather than sort of bring in the product exactly as we have it, for example, in somewhere like Singapore. So, I mean, to give you an example, like something like Pay Now in Singapore is obviously sort of a localized payment method. I think in Malaysia, there are lots of those types of e-wallets or local payment rails or QR systems. So it's good to be familiar with them and sort of adapt the products according to that.
Yep, definitely, that's true. So just to, just for companies that are going in, when you familiarize yourself with the market, was this a lot of desktop research, or was it, networking? I mean, I understand now that I think one thing that companies may struggle a bit with is they can't actually travel into market, obviously, due to, the pandemic restrictions. So how do you think companies can sort of conduct their research before going in?
Yeah, I think for us it was mainly desktop research plus talking to people we know in the market, like this on video. I mean, it definitely would have been a lot faster if we could have gone in and just spent some time there. But in the absence of being able to do that, yes, it was everything done remotely.
I see. Okay. Thanks for sharing about that. Yeah. And I think, we're very glad to hear that, Malaysia has a lot of opportunities and a lot of good space to grow. Do you have maybe some sharing on challenges that you experience when you try to penetrate the market? Any practical tips for companies that are going in terms of things like securing a client base, recruiting talent?
I can go first. I think I would actually say that there was a lot of, I was surprised considering the current situation and not being able to get into the market. I was actually very pleasantly surprised how we've been able to launch, but also the speed of growth. It's actually our fastest growing market. And I think one of the real positives I would point out is that we have found the average sort of business in Malaysia very, very open to adopt digital solutions, and also very, very responsive to sort of digital advertising and some of the sort of marketing channels that we have that we've followed. And so, I think, yes, there have been challenges, but there's also been a lot of things that have actually played out better than we had hoped. So I would just start with that on a more positive note. But some of the challenges for us was probably, well, the two biggest challenges probably was twofold. One was just getting our business set up. And by that, I mean, even things like as a fintech, opening bank accounts can be challenging when you need client segregated accounts and slightly more complex setup than other businesses. And not being able to get into the market to have face-to-face interviews with banks, for example, or even sign forms is obviously another challenge. We had to do that all remotely, and we had to wait quite a long time while the banks sort of adapted their processes to allow us to do all of that remotely. And then the second challenge, which actually I wouldn't really say it was a challenge, it was more just something to factor in as it's time consuming, is of course the consultation process with Bank Negara. So they do have, we found it very useful, and they have a fintech arm which was willing to sort of have a discussion and collaborate with us, but that process can be a lengthy one. So that's something we had a positive outcome, favorable outcome at the end of it, which was great. So I as I said, it's not necessarily a challenge, but it's just something to factor in and be mindful of the length of time that could take.
Yep, definitely. So I think, timing delays and all, especially due to the pandemic, I mean, I think that's something that a lot of companies do have to factor in. But it's very good to hear, I think, that, despite the fact that there's not a lot of face-to-face interaction, there's been very good uptake of your services, and there's also been very good responses. Yeah. I mean, is this something that you have also experienced as well, Ian? Because I think some of the feedback that we do hear from companies is that Malaysia tends to be more of a face-to-face market than Singapore, and throughout this pandemic period, we do hear some companies telling us that it's been a bit more difficult because they're unable to travel into market. So maybe just hear from Ian a bit about your experience as well.
Right. I mean, just to touch on that immediate point, with regard to whether or not it's a face-to-face market, our experience so far has been that, for many of the parties whom we have spoken to, they're all open to using digital services such as Zoom and all of this to actually communicate. So we don't really see much of an issue with that, where it requires a physical interaction. Yeah, from that perspective. Yeah. In terms of challenge, sorry.
No, I was going to say, we've experienced exactly the same. I think that was a pleasant surprise because we weren't expecting it.
So I would say that in terms of challenges, there are two areas I would like to share more about, and they are number one, finding the initial set of customers when we entered the market, and two, adapting to local market conditions. So Abler is fortunate to have strategic investors in Malaysia that have helped open those initial doors to establishing our initial merchant network. We made it a point to understand the real needs of the customers and not just providing them with a solution, but one that delighted them. So as a result, we were able to then acquire new customers, increase average order values, accelerate revenues in a very short span of time. And that led to strong referrals from them to other merchants in other categories that those merchants were not in. Another part about the local market conditions is that we work very closely with the local government and industry partners such as Malaysia Digital Economy Corporation, MDEC, Malaysia Fintech Association, as well as our strategic investors to be plugged into the ecosystem. We constantly fine tune our offering according to our merchants' feedback, our stakeholders' feedback, and do the relevant market research to remain competitive in that space.
Yeah, definitely. I think that is something that is very important, having all the different networks in the market. Yeah, and so I mean, when you work with players like Fintech Association of Malaysia, I think they shared just now. How exactly do you maybe you can elaborate a bit more on how you work with them and how you network with them to grow to prominence in the market? Is that something that you're able to share?
Yeah, so I would say that in terms of working with, there's a lot of government entities such as MDEC that we work very closely with. In terms of Malaysia Fintech Association, I think they have done a great job sending out all sorts of information to inform the market, existing players as well as players looking to enter Malaysia, as well as hosting many relevant webinars to provide that education and information for us to be able to address questions. I mean, such as this webinar where both Jonathan and Wilson are present, right?
Yeah. Okay. And I think this also coincides a bit with one of the questions from the audience. Dan Wong has asked whether the Malaysian government's digital plans and fintech policies have actually helped in your expansion. So I think the Malaysia government has also introduced a huge My Digital plan this year. And of course, there's the different sandboxes and all that FAOM and Jonathan have also alluded to. So I suppose this would have been very helpful in your expansion.
Yes, definitely. So in terms of that, I would say one of the strongest initiatives, we can see our stakeholder is that through MDEC, we've seen a lot of different activities, programs that are being pushed out actively via the government to actually encourage the growth of the fintech ecosystem as well as the industry.
I see. Okay. How about Nikki then? For you, I mean, I'm not sure if the government, you feel whether the government's policies have played a significant role in Kadap's growth in the market.
Sorry, I would say not so much yet, but we are fairly new in the market. So I think we're speaking to them on a few initiatives at the moment. But I think the one that that did help, it's less maybe directly government, but it's the regulator side with Bank Negara, how they have a fintech team that engage with us, and also through the support from Enterprise Singapore team in Malaysia as well. I think the three parties were able to facilitate some conversations for us. So so that was definitely beneficial for us.
Yeah, I remember that. Yeah, we did approach Bank Negara earlier this year for that. Okay. How about other parts of expanding your business in terms of recruiting talent? Is that something that you have found a challenge within Malaysia? Or is that an area that, because I think we do kind of hear that there's quite a tech talent crunch in the Southeast Asia region. So I'm not sure if that is something that you also have to cope with.
So for me, and I mean, it may also be that we're early, so Ian, you might have more experience with this because you've been in Malaysia longer, but we've also been positively surprised on that one. And that I think we used to Singapore or even Hong Kong, I mean, the market's very, very crowded in the fintech space when it comes to talent. And so I would actually say going into Malaysia, it feels like there's sort of a less crowded or more opportunity when it comes to talent versus sort of what we see here. So actually, so far for us, we haven't found it that challenging. But again, we are, we just entered the market earlier this year. So Ian, I don't know if you've got another perspective on that.
Yeah, I mean, on my end, I think one of the first things that we focus on, when we were exploring our foray into the Malaysian market was identifying the right person to actually build the team over there. So our country manager and in that aspect was one of the key person that actually helped to build out the local team as well as make our foray into the country a lot easier.
So for both of you, it sounds that it hasn't been as much of a challenge to recruit the suitable talent as it sounds like. I mean, from all the reports I've heard. So you've both had pretty successful experiences in recruiting local talent.
Yeah, that is right.
Okay.
And I'll allude to Wilson's presentation, earlier on where he mentioned that it's a huge pool of talented individuals in Malaysia as well.
Okay, that's great. And I mean, in terms of affordability wise, I'm not sure if that's something that you would comment on. Do you feel that the talent is also quite affordable? Compared to maybe like regional wise? Maybe Ian or Nikki.
Sure.
Okay.
I mean, if you're looking at the perspective of the foreign exchange that Wilson mentioned earlier on, from that perspective, relative to the Sing dollar, then it is less. But I think the focus really here should be on the relevance and whether you're finding the right people for the right roles. That's more important than just the cost in that sense.
Yeah, definitely. That's true. Okay, so I think here we do have another question from another of the audience. So that she asked some companies do see fintech as a threat, and what do you say to companies or clients who are not as willing to change the status quo?
So, sorry, could you repeat the question?
Oh, okay. Yeah, so some companies see fintech as a threat. So I think so far we've heard that the Malaysian market is very open. They have been very willing to accept new entrants, and it's a very vibrant space. But I guess there might be some companies who still see fintech as a threat. And how do you convince clients and customers who may not really want to change the status quo and take up your solutions, for instance? Have you encountered such?
Yeah, no, I was going to say, so far for us, we haven't. In fact, we even work closely with sort of the banks and payment networks in Malaysia, who have also been very receptive and very open to having a conversation and to collaboration and seeing how sort of together we can build products and solutions that we can take to market. So we've actually experienced quite an open and sort of collaborative response from the market, including banks, which I think traditionally or historically, where they've probably been the segment which could see fintech more as a threat for some for certain solutions, but we haven't actually experienced that. And as I said earlier, I think we've also experienced the general SME market being very receptive to digital solutions.
That's great to hear that. Okay, has that been your experience as well, Ian?
Yeah, I would say I had a similar experience with Nikki in that sense that both the banks as well as the SMEs and businesses were very open to working together in a more collaborative approach. From that perspective, I guess one of the things might be that some of them might take time to really understand the product, to be able to see where the value is being created. But past that, they're just very happy to collaborate once they are able to identify, and if we have the opportunity to help them to actually see the value that can be created when two parties actually work together.
Okay, I mean, I'm very impressed by how positive your experience is, and I think that it's really great to hear. I think it's very good that we invited both of you to share on this panel. I think we'll encourage a lot more companies to be able to go in as well. So I think what do you see? What are you most optimistic about in your industry, and what are you most looking forward to, I guess, in the year ahead in terms of growth areas for your industries. Maybe Nikki can start first.
Sure. Yeah, I mean, I think in Malaysia, it feels a little bit like, much earlier stage ecosystem than we have here in Singapore. And so that feels like a really huge opportunity and a kind of very exciting opportunity as well. And that there's a lot of untapped potential. There's a lot of demand for digital, in our case, payment services that's not fulfilled, unlike perhaps some more developed markets, which are further along in their sort of journey when it comes to fintech. So I think for us, like, we see huge opportunity. We also see that it's a big market that's still, relatively untapped. And as I said earlier, if you listen to customers and sort of are willing to adapt and localize your product, which I think is the case when you expand in any market in Southeast Asia, because it's a fragmented region and they all have their nuances, then I think that the potential is huge.
I see. And I mean, I think, almost like 55% of the population, it still remains underbanked. So I suppose that really represents a lot of expansion potential for your for your solution.
Exactly. And especially for us, we sort of have a range of product sets, some that are more suited to the banked population, which is when we partner up with the traditional banks in the same way we do with Singapore, but we've also launched products and services that cater more to the underserved segment. And so for us, actually, which isn't an opportunity in Singapore today. So actually, in a way, we have sort of a broader product range and more opportunity across the different segments in Malaysia.
May I just ask a bit about the solutions that you offer for the unbanked population? Because I think this is not something that that I really read about on your website. So I think quite interesting to hear more about.
Yeah, one of them is very new. I actually can't quite share. We've got it in a beta at the moment. But another one of them, which is live already, is more around collection, helping businesses that are more traditional and sort of offline get paid digitally. So we have a product called Card Up Collect, which allows them to do it without needing actually any sort of infrastructure, payment gateway setup, or even a local bank account.
Oh, okay, so they can collect money without having a bank account.
Yeah, we can collect into wallets and things like that.
I see. Okay, yeah, that's very impressive, and yeah, I think that would be a tremendously useful product. Yeah. So maybe Ian, we can hear from you about what is the next big thing that you expect in the industry, and a bit about what are you most excited about in terms of growth for Abler?
Sure. I think the buy now pay later space is gaining a lot more prominence with the recent news, for example, of Apple partnering Goldman in entering the space, and you have Square's acquisition of Afterpay in Australia. So I think that there's a lot more that is happening and developing with this industry. For us, we are very heartened by the strong feedback from our merchants and consumers. And are really excited to be able to accelerate our support to them with the expansion of our team, and hope this really helps to amplify our mission to humanize financial services that improve people's lives. We do have some major announcements coming up in a couple of weeks. So yeah, feel free to follow our LinkedIn page for the latest updates.
Sure, okay. And this would also pertain quite a bit to the unbanked population, I suppose, in terms of increasing financial access and reach.
That's correct. We really want to focus on not just relying on the existing infrastructure, but being able to allow even those who don't have a bank account to be able to access those products.
Yeah, definitely. All right, that's really great to hear. I think we are reaching the end of the session, but I think maybe it would be great if we could just hear from both of you about your most memorable experience entering the Malaysian market. Maybe your most memorable experience, that our audience can just understand a bit about your journey. Yeah.
Challenges or positive or challenge or?
Well, most memorable, I suppose it would have to be slightly positive. Maybe a challenge that you were able to overcome. Your greatest takeaway from entering the market. Yeah.
Ours was probably when we finally got clearance after a very lengthy consultation period with Bank Negara. So I think to get through that and to have approval to move forward unlocked then a lot of the sort of suddenly all the pieces fitted together for us to be able to actually launch.
Okay, how long was your process, by the way?
It was about 9 or 10 months.
Okay, well, so close to a year. It's quite all right.
Yeah. Yeah, for us, I think it would be sort of a combination of this too. So one would be securing our strategic investor in Malaysia that really helped with our foray into the market, and of course getting our country manager head of country head on board. Yeah, to be able to help us in Malaysia.
So so basically he runs, I mean, you run it remotely from here, and then he runs all the operations in Malaysia, I suppose.
Yeah, she runs it in Malaysia. Yes, that's correct.
That's great to hear. Okay, so thank you both, I mean, for your sharing today. I think, we've really heard a lot of positive things about your experiences in the Malaysian market, and I hope that really encourages the audience on this call to also enter Malaysia as well. Thank you very much, Nikki and Ian.
Thank you,
Thanks,
everyone.
Inga. Thank you.
Back to you, Eunice.
Thank you, Ian. Thank you, Nikki. Thanks for sharing your journey with us. It was really impressive. And it looks like we have covered all the questions from the audience. And before we wrap up this session, just a quick sneak peek. We have another exciting webinar coming on 31st of August, which is focusing on startup fundraising from seed to pre-IPO. So please stay tuned to our SG Fintech Club portal at club.singaporefintech.org for the registration link. So if you are not an SG Fintech Club member yet, please write to us at hello@singaporefintech.org. All right, thank you everyone. We appreciate you being here today with us. And please take 2 or 3 minutes to share with us your feedback through the survey form after you close the browser. Thank you once again, and we will see you next time. Goodbye.